Hey guys, today in the episode with Jaden Sterling, we are actually going to discuss how can investing in stocks, especially when they are particularly volatile, as most of you probably have heard in the media has happened in 2022, how can investing in stocks build a bridge to investing in real estate, which is our main area, and Jaden is an expert in stock investing, so he will tell us a little bit how that bridge can be built. So stay tuned and find out how we can build connections between stock investing and real estate investing. Hello and welcome to another episode of the Ideal Investor Show, and we have a special guest a little bit out of our league and out of our main area today, but that's what makes podcasting so interesting. I want to welcome Jaden Sterling to the Ideal Investor Show.
Thank you, Axel. Nice to be here.
Yeah, thank you for making time and being with us. And I know that you are an expert in the stock markets and trading and using tools to do this, but can you give us a little bit of an introduction of how did you get into this and how did you get to where you are today?
Yeah, oddly enough, it happened. At age 14, I had an epiphany. It's like time stood still and I knew three things very clearly. I knew that I'd be speaking on stages around the world. I knew I'd be speaking about money, helping people to be empowered by it rather than enslaved by it. And thirdly, I knew that I would be teaching from personal experience, not from a book I read or a course that I took.
Yeah.
So you can imagine, I mean, that set the stage for my entire life. It's why I went to school at American University and studied finance. It's why I worked on Wall Street for Citigroup and Merrill Lynch to learn as much as I could. And it's also why I got out of the business at 31, because I learned a lot of interesting things, which I'll share with your listeners and viewers shortly about the business. And I knew I needed to get out in order to grow my wealth.
Okay, yeah, that's very good. And so with that, basically, it's a perfect segue to talk a little bit. What are actually the services or the help that you're providing to customers? What is it? And maybe talk a little bit on how that works.
Sure. We teach people how to tune into their inner guidance system in order to analyze and purchase stocks rather than the old way, which is reading charts and analytics and staying so much in the head. We teach people how to drop down into the physical body and navigate the investment world. So we take a whole different approach, Axel, than most people when it comes to investments. And we created software that's intuitive as well to help people along that journey, which I can talk about more later.
Yeah, that's cool. So no Fibonacci's, red candles and blue candles and 200 average lines. Yeah. And I don't know much about it, but a few of those terms. So it sounds a little different than Bloomberg trading desk or any of that stuff.
It is. Some of those things are important, and that's what the software does for our subscribers. It helps them with the heavy lifting. But really, for the most part, to make money in anything, whether it's real estate or stocks, is to follow your inner guidance system.
Okay, and you mentioned that term twice. Now, what I'm using a lot in our practice, and for the audience who didn't see this, but before we started recording, Jaden showed me an awesome print where he used the word ideal in connection with the bull from the bull market. So that's really cool. And one thing that I'm oftentimes, almost to the extent of preaching, talk about is mindset. So would you say inner guidance and mindset are similar, or can you describe a little bit what's different?
Yeah, great point. Mindset is the freeway that we drive down. And depending on what someone's mindset is, will determine what that freeway is. Is it paved with gold, or does it have obstacles along the way? So the inner guidance system is the vehicle that helps you drive down that road called mindset. And if your inner guidance system is finely tuned to show you investments that are profitable, investments that will make you money, investments that are aligned with who you are, what your values are, then it's easy to navigate the highway through the mindset as well as the inner guidance system. Does that make sense?
Yeah, that totally makes sense. So for me, if I translate that or try to translate it in my own words, I believe I hear a little bit a level of conviction that you need to have or should discover for yourself to determine which things in which places you want to invest? Is that kind of in the same direction?
Yes, and you have to unlearn what you've been taught, which is settle for average returns. That's what mutual funds are set up to do, is to give an investor an average return. We know by the very nature of a fund with hundreds of different stocks in it, it's not set up for success. So what we help people do is eradicate that belief system to overcome any type of fear or self-doubt so that they can have that confidence and conviction in order to follow their inner guidance system.
Yeah, I hear you, and I totally, totally agree. I would say the same thing, by the way, about 401ks and several of these other tax supposedly advantageous things where people try to tell us they can predict the future and say, okay, we have 30 trillion in debt, and currently you pay whatever, like 15% or sometimes 21% capital gains. And I can predict in 20, 30, or 40 years when you retire, it's going to be less. So if anybody believes that, you'll be my guest. But coming back to what you mentioned, I would like to ask you, pretending a little bit, as a maybe client of yours, how much is it really, as you mentioned, trying to help people to maybe not forget, but suppress or let go of what they had learned, really in the context of what certain tools that exist out there, and tools, I mean, like different ways to invest, really do?
Mm-hmm.
Or is it more the myth that they are told about? And to be specific, I believe a lot of people do mutual fund investing and 401k investing because somebody convinced them that that is basically a way to supposedly make money and supposedly make some profits without really having to take care in any way. You just give it to somebody, or you let your employer deduct it from your income, and you can trust us. I hear kind of like the Fidelity or the Charles Schwab guy. You can trust us that we keep it safe and that it will generate, as you said, Jane, this kind of average return. And then they always say in the last sentence, but we can show you how well we have been doing for the last 15 years. But remember that historic returns are no indication of the future. So, which is actually for me, it's a funny thing, and I should not take your time in expressing how your software works. But I've always, when I first looked into this, I said, how is it that there are about 5,000 or 6,000 companies, depending on how wide you're looking, but there's 20,000 mutual funds, right? So, and then somebody explained to me, and they said, mutual funds are like houses, which he said because he knows that I'm in real estate. He said, you know that most people don't live in their house for much more than 4 or 5 years. Mutual funds are the same. When they don't perform, then they just shut them down and move the money to the next one. So.
Well, Axel, the thing that really struck me is Morningstar, which is the rating agency for mutual funds, did a survey back in the 90s and asked portfolio managers, hey, how many of you actually invest in your mutual fund? And it was 1%. Only 1% of the managers actually own shares of the mutual fund that they manage. And the follow-up question was, why is that? And you know what their answer was? We can get a better return elsewhere.
Yeah, they also, I wouldn't be surprised if the third question, why do you think about that, is that they see themselves of more of an expert than what a mutual fund can provide.
Yeah, they're exactly. They know they're going to be underperforming. Like you pointed out, 20,000 mutual funds, a sea of 5,000 or 6,000 companies to buy. They all own the same companies.
Yeah, exactly. And I mean, I'm also a little bit allergic with rating agencies because I'm the only stock, just to full disclosure, that I own is Tesla. And I'm a big fan of whatever you do with your money. Even though the majority of my money and the money advice that I give to other people is in real estate, but you want to have some diversification. If you say I want to use value assets, that's what I would recommend, to have some diversification within that. But when I looked in it, I found out that Tesla is like the 6th or 7th largest portion in the S&P 500, but the rating by both Moody's and S&P is junk rating until like a month ago. Right?
To be very
And I said, what are the criteria, right? So I'm the kind of guy who reads up on that, and I found out, okay, the criteria make sense. What triggers a rating agency to actually change the rating? Right? And I couldn't figure it out, so I asked a few friends, and I actually happened to have somebody I follow and I know in Santa Barbara, and she was actually working for Moody's. And she said, well, it's pretty
Mm-hmm.
easy. If you want, for example, to issue stocks, or you want to issue debt, or you want to issue bonds, you get the best possible rates and the best possible promotion if you get a good rating. Now, to see what the pricing should be for either one of those, you go to any of the rating agencies and say, please do an evaluation of our company and publish the report. And obviously, you have to pay for that. And because Tesla has no
Yeah.
debt and would never ask them for that, they were obviously junk rating when they started 20
Yeah.
years ago, but so finally there was
Yeah.
such a wave of people in the last, I think, most of this year, that they finally convinced. They really shamed actually S&P into giving them a better
Yeah.
rating, But we don't want to waste
Exactly.
the time on the stuff that we learned from to not do it anymore. Tell us a little bit about your
Yeah.
software, Jaden.
Well, the software is designed to do the heavy lifting for investors. We have our patent pending currently for the algorithm that we created. And the algorithm essentially looks at fundamentals, financial indicators, as well as technical indicators, and evaluates the company based on those. We have a ranking system from 1 to 5. But the important thing to know is that once we look at the software as one of those tools to give the investor confidence to buy stocks. That's the key. And we post our returns right on our website, so you can see our returns over the sectors that the stocks are listed in for the previous 30 days and the year. And we're always tracking between 80 to 130% above those averages. So, and that's above those sector averages. So we're proud of what we've created. We know we've created a really powerful tool for investors to confirm what their gut is telling them about investments. But I want to bring it back to, because I know your expertise is real estate. In the early 2000s, I built a portfolio of 125 properties, $12.5 million in real estate. And I did it through using my stock portfolio. And let me tell you how I did that. I took my IRA and put it up as collateral to do deals. And I would say to the investing bank, look, if I buy this 8-unit apartment building and do such and such upgrades, we replaced windows, we increased the rents, we did all that, can I have my IRA back? And they said, sure, no problem. So that's how I ended up doing many, many deals with the banks in US in the early 2000s in real estate. I mostly did apartment buildings, mixed use properties, and commercial buildings.
Yeah,
And it
before
was
you go on,
these.
Jaden, real quick, can
Yeah.
you also mention the percentage that you could use as collateral of your IRA? Because most people don't know that you can even do that, let alone up to what percentage.
Exactly.
Yeah.
Exactly. Well, it depends on the value of the property that you're buying and the value of your IRA or Roth IRA. So it really depends on the value of the asset, what you're purchasing, because they still want 30 or 40% down.
Yeah, no, I understand that, but I have seen a few people actually apply this because they had either pretty large amounts in IRAs or 401ks,
Yeah.
especially when they were basically exclusively stocks, even though the stocks were spread in mutual funds or whatever, that most of the lending agencies said, yeah, we're willing to give you like 70 or 75 or 80% of the value at the day that it was basically pledged, because for one, they obviously want to cover for any fluctuations. But also, I think that's a pretty common thing, if my studying is correct, that stocks in general can get somewhere between 70 and 80% collateral value, right?
It's correct.
Yeah.
Yes.
So I just wanted to put that in. It's not, if you have like an IRA for 150,000, it's not 100% of that number is going to be your down payment.
Correct. It depends on the lending institution
Right.
and what their requirements are. So you have to check.
Yeah. And then, obviously you're right. If you do like $1 million place and it needs 30% down and you have 200,000, you need to have the rest from somewhere else, obviously.
Yep. Correct.
Cool. Yeah. So please continue.
Yeah. So there's ways to work with your equity portfolio in order to help purchase real estate and or make improvements. You can borrow against your equity portfolio. It's called margin. It's tax deductible. 100% of the interest expense is tax deductible. So you don't even have to liquidate your equities if you're wanting to make capital improvements in buildings and refinance them later on. So there's so many strategies that you can combine your stocks with real estate if you're interested. It's one of the most powerful tools I've ever seen in terms of buying real estate. I even offered a guy, he had a 21 unit apartment building that he was selling, and I offered some zero coupon treasury bonds to buy. It's because so zero coupons are at a deep discount to their face amount. So for me to buy, let's say 100 back then in early 2000, 100,000 face amount of bonds would have cost me $50,000.
Right.
And interest rates did nothing but drop during that time. So he would have made a fortune on those bonds. He was too skittish. He didn't take the deal. But there's ways to work within investments that can really help leverage a portfolio without coming up with a bunch of cash.
Yeah, exactly. Well, I think you make an excellent point, and it goes, in my view, and I would love to hear if you agree with that. If you think about that road that you spoke about, right, that journey that people take, and whether they start out as a victim or start out with a creator mindset, and whether they immediately have a tool like yours and advice from people like you and me or not, what I'm finding is if you, for example, have a job, a normal W-2 job, and you have some expendable money left at the end of the month, or if you're smart and you're putting 10% or something like that away, pay yourself first, and then do your rest of expenses. Either way, you're using this money for an investment. Let's say you put it in an IRA, 401k, in your software system to build a stock portfolio. You have worked for that money, right? And so I believe it's important for people to realize there are these different options, and that's part of why we do the show, is to say, okay, so you can work, for example, for some of your money with Jaden, and he helps you to invest it, to grow it and make profits. And then you can also use it to make it work for you instead of you being the only source of work that generates new money, right? So this bigger concept of how can we use the money that we once made and decided to use for investment in many different ways, so that ultimately what we call reaching the time freedom point is actually where you only let money that you once make work for you, and you don't have to really work anymore, right? So would you agree with that overall concept that finding ways, whether it's through stocks or real estate or crypto or whatever other interesting stuff people come up with, NFTs and so forth, to make your money work more than once for you?
That's right. I love that point, Axel. Make it work more than once for you. You can do that in the equity market first. Double your money is not difficult to do. I just did it last week in a company that our software pointed out to me. And I thought, okay, now's the time to buy it. I checked in with my gut, doubled it in 3 trading days. So once you have some money growing for you, actually working for you rather than you working so hard for it, then you can look at, okay, what's my next step with this money that I've just created, this pot of money that I've earned through the equity markets. It might be real estate. Heck, it might be you're going to invest in an oil and gas venture. Who knows, right? There's so many amazing investment opportunities out there for investment dollars. But the thing that most people have to understand and get over is this idea of fear around taking a risk. Axel, I don't know about you, but I feel like I'm like the fear terminator. I'm out there, ninja style, knocking out people's fear, because that's the number one thing that I see. People are so afraid. They're like, oh, I keep hearing the market's going to go to zero. It's going to collapse. It's like, that is such a bunch of baloney. That narrative is to keep people out of the equity markets, keep them out of real estate, afraid to invest their money. I really want to drive home the point that risk does not have to be scary. Risk can be rewarding, and it can be super exciting because you're finally getting your money to work for you. Most people don't understand that concept, Axel. Most people, know how to work for money. They've been told from an early age, go to school, get a good job, and work. And that's what our whole society is built on, is the worker bees out there building up companies for the CEOs and the shareholders. So I help people shift their perspective and become the shareholder of everyone's work, everyone's everything that they're doing and contributing to build up a company. All you do is figure out what's the right price to pay for an investment, because at the end of the day, you make money when you buy, not when you sell. And most people, that concept blows their mind. Even my brother was a realtor back in the 90s, early 2000s. And I told him about that. And he said, I don't know what you're talking about. When I sell a property, I get money back. I said, yes, but it depends on what you paid for that property, how much money you get back.
Yeah, and
then he started to get it.
That's still true. Yeah, and it's true in real estate and other things too. I like to use a picture that comes from this original, like at least when I was little, we always, had these stories about like you had the angel on one shoulder and the devil on the other shoulder, and they were kind of talking in your ears from their perspective.
That's right.
So for risk, and I totally agree with you in the importance, I've always said risk needs a guardian. And the guardian for risk, in my philosophy, is discipline, right? So if you go and say, okay, take any number, let's say you have $10,000, then your guardian should help you, and your gut in your philosophy should help you to decide how much do I put in which category. I like for these kind of things to have like 3. The number 3 seems to be an interesting number in that context, to say, what do I absolutely don't want to lose and be content with not making the maximum profit? Which one am I in the middle category, willing to basically be a little more adventurous, but still try to keep it as much as I can? And then number 3, that's the kind of money where I have huge potential, double my money in 3 trades, but I also take the risk knowingly that I could lose it if something goes wrong. And I don't think this is exactly black and white the way I describe it, but this guardian of discipline, I'm sure, is much more important when people work with you, Jaden, and every other day you call them and say, pot number 3 just doubled again, and pot number 3 just doubled again, to be disciplined enough to say, okay, why don't I just throw everything in pot number 3? So,
yeah.
And to me, this comes back. I've been preaching, if you put my name in Google, you will find how many things I've written and spoken about balance, right? And in a sense, the discipline and the risk is kind of a form of balance. And I think that helps, maybe I wonder how you express it when you do your ninja stuff, to actually put risk in a certain frame so people can relate to it. How do you do that?
Well, I was thinking about, you brought up balance, and the thing that's most important with balance is the inflection point at which 2 things are balancing.
Right.
So that point that allows for something to be balanced is the focal point. And my focal point is a question I ask myself each and every day is, how good can I stand it?
Yeah. Yeah. That's what I mean by discipline, right? Like if discipline also says the little, if you want to call discipline, the angel that says, hey, Jaden, you need to sleep well. Sleep is important. If you're constantly afraid, you won't sleep well. Your life will be miserable just for potentially double the next trade or the next 2 trades. That's what I would say in my words. How much can I stand, or how little do I want to stand?
Yeah, exactly. And to your point earlier, actually, it was 1 trade, 3 trading days, the money doubled. So it was 1 investment that I made, and in 3 days it doubled. So that's very common in our world and what we teach. It's funny. I had a student just reach out to me this morning, and he said, I did a trade, he called it the Sterling way. I love that because he said, I doubled my money and I pulled out my original investment. And that's what I teach. As long as you're pulling out your original investment, you have no risk at all. The risk is 0 at that point, and the investment can continue to grow.
Well, you have probably heard all kinds of jokes about, how much silver do you own, that kind of stuff.
How much what?
How much silver do you have, or how many pounds do you own, and stuff like that.
Yeah, for sure. Silver and gold.
Somebody dealing in money to have that last name is probably not the worst thing, right? Like credibility.
That's right. Exactly. Yeah, for sure.
From a long line of Sterling.
Yes.
Okay, now can you maybe, to make it a little more, understandable maybe, or transparent, can you give us an example? I mean, you mentioned your own example, but when we look in a little bit longer term, because our audience is known from me and from other people in real estate or similar investments to have longer time horizons, partially to get to this time freedom point I mentioned, but also because getting your money to work and then generate passive income, whether it's through selling or dividends or whatever other means, or like in our case, we have these performing properties where you ultimately they just get paid off because the tenants either pay off the mortgage or you put some of your profits in to pay off the mortgage and then they just perform. So how would like somebody who says, okay, I want to add as part of my diversification some of what Jaden, see now I'm stuck on that, what Jaden talked about. How would that look like if somebody came and said, okay, like I have literally a client who came to me originally and said, okay, I don't want to work anymore in 10 years from now.
Mm-hmm. Awesome. So you would say, great. What are you doing right now with your money? How are you investing your money? You'd want to look at where someone is and take them to where they want to go.
Right. Yeah.
So partly of where most people are is now, especially with inflation, we're seeing very little disposable income. And that's the tricky part because, we saw a huge run up in the real estate market. And for a lot of people, it's making real estate much more expensive with the raise in interest rates. Currently, they're talking about rates hitting 8% in the US by the end of this year.
Right.
That's a big jump, big several hundred basis point jump. So I would say to that person, start with the base of your equity portfolio, buy dividend paying stocks. And then what you do is you reinvest. Let's say, for example, you find a company I own shares of a company that pays 13% annually. So every month I get a dividend. I reinvest that dividend and then I do an advanced strategy called selling covered calls on my equity position, which means I get extra income each and every month. So as long as the stock moves sideways and or slightly down, it doesn't get called out of my portfolio and I keep that extra income. I add all that to my base, and the stronger someone's foundational base is, financial base, the easier it is to achieve a goal like retiring in 10 years. And secondly, I would say to that person, do everything you can to pay down all of your debt. We have a crisis, Axel, right now in the world. It's a global crisis, more so in North America. And that is 2/3 of most people are in debt, which means they have a negative net worth. So their debt is more than what they have in terms of cash or equity or position. So I'm telling everyone, especially in this high interest rate environment, as rates continue to go up, you got to pay down your credit cards. You got to pay down your lines of credit. All that has to be paid off. Your vehicles, vehicles are so expensive now too. Everything has gone up astronomically. It's also why your show and what I talk about in terms of being an investor is key and critical during this time because you have to now outpace inflation.
Right, exactly. Yeah.
And sitting in cash or putting your money under the mattress isn't going to work anymore. That just doesn't work. You're not, every time you go to the grocery store, you're seeing prices skyrocketing. And food is getting out of control. Heating, energy is out of control. All of these sectors are hitting us all at once. And it's going to take quite a bit of money to get through this. So we have to let people know it's imperative now more than ever. Invest your dollars in order for them to grow because you have to do your best to outpace inflation.
Yeah, I'm totally with you on that. And you're right. It's definitely gotten harder in the real estate world, and I think also in other places, especially for anybody who has typically a mindset of longer term investments, because right now the trajectory is to less and less performance. And I mean, if you listen to Jay Powell, that's actually the stated goal, right? Like we're doing what we're doing because we want to make your life miserable, both as an investor, as well as an employer, as well as an employee, to get to 2% inflation. Now, whether that's realistic or not is not really important. The fact is that's the stated goal and the actions are being taken. Actually, by the way, the 8% has been temporarily reached already a few weeks ago.
So can you imagine, so if the 8% is reached, the qualifying rate is going to be more like 9 or 10.
All the statistics show that the number of applications is like totally in the dumpster, right? Because either the application doesn't even make it through the first hurdle, or people say, I looked at this house 6 months ago, like especially for owner occupied, right? I looked at this house 6 months ago and had a bank calculate what my mortgage payment would be, and that came out to be like, let's say $2,100. And now that the house is not even more expensive, the same payment is $3,000. There's no way I can pay this, right?
That's right.
So that has changed the whole environment. And I think you are very right. And I agree with you that our shows and podcasts and stuff are important in that context to say there are times to really put everything that you have into investment opportunities because they're called opportunities. But then there are also times where the environment is just not very conducive for certain investments to do. Or you have to have this guardian of discipline that you have really trained so that you can maybe, when you have some money, should you have some money, you can maybe use that and be more on the risky side, because an extremely volatile market, I would say, is at least my philosophy, has to tell you that the risk is increasing, right? And
Well, and I want to speak to a volatile market because that's the only market where you can actually make money in. If the market moves sideways like it did in the whole decade of the 90s, which is when I started in the business in 1989, the entire decade of the 90s, the market moved sideways. We had high inflation, high interest rates. And the thing is, this market is fantastic because on the equity side, we're down 35% year to date. So there's huge, we've already had, people are talking about the correction. We've had the correction. We had the correction in 2020. The market was down 36% in a period of 6 weeks. What did all the big companies do? They went in and bought their stock back. Did they all have crystal balls? No, the whole system's rigged. They were in on it. They knew what was happening. So as an investor, you have to understand the market is rigged against us, but it's rigged to go up.
absolutely. I agree with you on that, Jaden. The thing I consider risk not just a matter of the pure number of overall improvement in like something like the Nasdaq or the S&P or stuff like that, or the Russell, but also how much attention do I need to pay? Right? If I go and have a conviction, like in my case, to say I'm investing in Tesla for their mission. Yes, I ultimately also want the investment long term, and I mean really like 10 years long term, to be profitable. Yeah. And I'm very convinced it's definitely a 10x investment. And now it's probably more like 15 since they went down quite a bit.
Yeah.
But what I see there, even in this long term, now I'm not constantly throwing money at it. But if I wanted to really take advantage of the volatility, I really would have to be much more involved, or have somebody like Jaden be involved on my behalf. Right. But
or you just set limit orders. When you buy a stock, you set the sell limit order at what price you want to accomplish, and then you don't do anything. It just happens automatically.
Oh, I know, but that's then the order is executed, hopefully at some point in the way I want it, and then I have to pay attention again, right? It's not like I buy Tesla every month for $500 or $1,000 or $10,000 and just let it ride. And there's I don't know if you ever heard about a relatively famous but sadly dead German guru for the stock market, and he said the best thing you can do is be convinced, or let your inner guidance tell you what you really believe in. Invest the money that you can afford in those stocks, take a sleeping pill, and wake up 10 years later and reap the benefits.
Yeah. And back in the 90s and early 2000s, that worked, that buy and hold strategy. But there's companies like Coca-Cola. I owned it for 15 years. For 10 of those 15, it moved sideways. It did nothing. It stayed in the $50 to $51 range for 10 years. So you also have to be aware that because of the volatile market, if you take a little more interest and a little more action with the portfolio, you can make a lot of money in this equity market.
I'm so grateful that you mentioned it and put it that way, because I think that's really the kind of like the secret in a way, to say, okay, it's not the news that you hear in the mass media who talk doom and gloom for the stock market. Right now, they talk doom and gloom for the real estate market. Last week, they talked doom and gloom for the crypto market. If you really look at, okay, what are kind of, and doom and gloom for gold and silver, by the way, as well. So there aren't really a lot of things. Commodities haven't been that great either. So if you look at the media, they basically have now blamed every market there is for being doom and gloom. But when you really look closer, and I can say this for real estate, and I think I just heard you say it in kind of similar words for the stock market, that's true if you just throw money at it and don't do with it. But if you pay attention and dedicate a certain amount of your attention to it, then you can actually take advantage of the ups and downs. And that's actually where the money is made. So I think that's a super important message, that it's not what everybody is doing. It's where can you actually find the opportunity and take advantage of it? And how does it fit? You call it inner guidance. I would say, how does it fit into your balance between risk and discipline? And as long as you do it that way, and maybe have a tool like your software to help you find out what actually are the places to put the money, then you shouldn't have any issue to sleep well and still become successful with your money.
You're bang on. And you have to remember, I've known this for 34 years as a professional investor, that the markets will always climb a wall of worry.
Right.
So as long as this narrative is out there, you're going to make money. That's what's so incredible about this. It's such a disconnect between mainstream media's narrative and what's actually going on behind the scenes. There's a lot of money to be made. So I think you're right. Someone can navigate or work through that process of discipline and returns. And as long as you're disciplined about your approach in anything in life, you're going to get great results.
Absolutely. I have one more question, and then I want to ask you the typical two questions I ask everybody that comes on the show. But I have one more question, and that's especially for me as not really an expert in the stock market or stock investing. I mentioned Tesla, but I know a lot of my friends who have other interests and other convictions. One particular friend can't wait when SpaceX finally goes public because he wants to desperately invest in that. But what I'm finding every so often is that there seems to be a massive disconnect, really like a foundational, fundamental disconnect between what a company is doing, whether it's their quarterly results, their annual results, their sales, their profits, their debt, and all those kind of things, and the reaction to all of that by the stock market. And I've seen it in both directions, but what I find the most crazy, and I'm really curious to maybe learn from you if there's some kind of explanation that somebody like me can understand. How is it, or who is actually turning the knobs so that what the company really does as a business seems to be sometimes completely disconnected? And I can take current examples, but I still remember that Amazon was for years and years and years accused to not make a profit, and therefore they're supposedly not worth anything. Right. And so these kind of really massive disconnects that almost always turn in the end out to be completely false. But I wonder if you have an idea, or you can explain to the audience,
Sure.
Where does this massive disconnect come from?
Yeah. So it's capitalism. The reason most people incorporate companies is to use them as a flow through losses. And in the US, it's quite common for a company to not make money for a long time. So therefore, they don't pay taxes. So there is a disconnect between revenue and earnings. And I see it now in food companies. For example, there's a company up in Canada here called Empire Foods. They own some of the largest grocery stores in Canada. Well, their revenue on a quarterly basis is outpacing their market cap.
Yeah, revenue.
Let me say that again. Their quarterly revenue, remember we were talking about how high food prices are at the grocery store? They are printing money, these grocery stores right now, these big, big companies. So there's always going to be a disconnect. It will never make sense what the stock price does versus how well the business is doing. That's why you actually have to look more at the fundamentals rather than the financials, and also the technical indicators. That's why we take all three into consideration. Charts speak the loudest. You have to understand what you're looking at when you see a stock chart, and some SMA 200s and simple moving averages, what that means. It tells a story in relationship to the stock price. If a stock is above all those averages, it's going higher. It's that simple. And then you look at the fundamentals, which is, what are the insiders doing? Are they buying or selling their stock? I find that insiders are almost 98% bang on when they go to sell their stock. Why would that be? They're insiders. They know what's going on. So then we look at other indicators in the fundamental space to see exactly, is there interest in this stock? I don't put any credence on what analysts say about companies, because you talked about it earlier. They're paid to speak. You have to remember that. They're literally paid to speak, and they're going to speak in terms of how much they're paid. It's that simple. And they'll all say the same thing. No analyst will ever stick their neck out. They're all pretty much saying the same thing about companies. So that is why we go right to our intuitive guidance. I call it intuitive investing. We go right inside and say, does this make sense to buy shares of this company right now? And then decide right from there. When I bought real estate at the end of my career, I got to the point, Axel, where I could stand in front of a building. And if my body moved forward, that meant I should buy that property. It's good for my portfolio. If my body moved backward, it meant this is not right. And I would walk away from the deal. This is before I even looked at any financials, any numbers, ran any spreadsheets. I let my body weigh in. And if we can tune into that, and we're not taught this in school, but there are some people out there talking about this in books. But who reads books anymore, right, Axel?
Well, I still read books. No, I only read them in a different way. They're now digital, but that, or sometimes audiobooks. But no, I think it's important to keep reading. The thing about it is that, I think, and I suspect you would agree, there is a little bit of a component of, and I'm hesitant always to use the word, but there is a component of wisdom that needs to be acquired, right? And there is a guy named Neil Fleming who was once challenged to come up with a definition. And his definition for wisdom is the sum of knowledge and experiences, right? And so you can early on in your life acquire a lot of knowledge, but you just have to have some time to apply it or experience what it does and how it works and stuff like that. And that's what I believe we ultimately, as we get older, we see. And that goes to kind of like that, what you call inner guidance. Wisdom, I would say, is to be able to really find out, I can trust my gut, or I can trust this combination of what I know and what all these experience over time have taught me to know what's right or wrong much better than some person who claims to be able to estimate how a company performs when they basically talk to the CEO 3 days before the quarterly results or something like that, right? So,
Right.
So cool. Well, I want to thank you for giving us a little bit of an insight in how we can do this. And especially, I really appreciate this building the bridge between stock market investments and then using it, for example, as collateral or as a bridge to future real estate investments. Now, there are two things I always ask every guest at the end of an episode. The first question is, if you could meet anybody, current or past, who would it be and why?
If I could meet anyone, current or past, is that what you
you
said?
always wanted to meet, who would that be and why?
Creator. I'd want to meet Creator, the initiator of everything that we around us. That's who I'd want to meet. And I'm sure I will at some point when I do pass.
Yeah, but then you will know if it's actually a simulation or not, right?
That's right. Then I'll learn if it's a simulation or not, which I think it is a simulation. So cool that you know
there are more
that.
and more indications, I guess.
There are, totally, everywhere, every day.
Right. And then the second question is, if you had a time machine and you could go forward or backwards, you know what you know, you're just not allowed to change the time-space continuum, as they always said in Star Trek. Where would you go and why?
I would go back to the beginning of time and I would see exactly how the earth was created, and I would see exactly how powerful human beings are, because we've been lied to about so many things, Axel, in our lives, so many things. And I am a truth seeker, so I want to know the truth.
Okay. And then you do the whole however many billion-year journey to see how that all came together. Sure. That's good. All right, good.
Absolutely.
Well, Jaden, thank you so much for spending time with us and educate the audience about stock investing. If people say, hey, I'm one of those people who doesn't have a whole lot of disposable right now, so real estate is maybe a little bit too much at one at a time. But Jaden had a good point. How do they get in touch with you?
SterlingStockPicker.com. Just go right there. Sterling, STERLING, stockpicker.com.
Awesome.
And they can email me right through the website.
That's very good. Thank you. So we will put that also in the show notes, and then anybody who wants to find it can find it there as well. All right, Jaden, thank you so much for being on the show. It was awesome, and I learned a lot, and I'm sure the audience had a great benefit from listening to how we can combine our investing with stock market investing.
My pleasure. Thank you, Axel.
Thanks for listening, and I hope you enjoyed today's episode of the Ideal Investor Show. More info and the links we mentioned during the show are in the show notes, or you can go to our website at idealwealthgrower.com and sign up for the Apple Podcast link. And if you like to talk to me, sign up for a strategy call. Hopefully you want to share what you learned with your network and bring more people in. We are really eager to hear your comments. And until next time, be well, stay safe, and ciao.